You're listening to OPIS Talks, where you'll be in on conversations with insiders in the energy, chemicals, and environmental commodities markets. Guests share insights into the latest trends and innovations, industry challenges, and much more. Let's dive into the conversations that explore where the energy economy is headed, right here on OPIS Talks.
Hello everyone, my name is Humberto Rocha and I'll be your host today. We have talked about advancements and innovations in nature markets. We've gone into the pricing dynamics of carbon markets in the EU and the UK, and we're exploring the metrics in frameworks with which to measure our impact on nature as well. But today, I'd like to dive into a company that is doing excellent work on carbon accounting across different types of projects, and making that data accessible to anyone outside these projects who wants to look in and learn more about the carbon accounting or carbon intensity of these processes. I'd like to welcome to our podcast today Svenja Telle, the CEO of Denominator, to our podcast. And before we get started, we recently celebrated Chinese New Year, the year of the fire horse. Svenja, I read your posts and thoughts on the state of the world and energy affairs, but also, and more importantly, about your 4 horses. Could you tell us a bit about yourself and Denominator, but also, and maybe a harder question, what is harder, being an entrepreneur or working with horses?
That's a great icebreaker question. And thank you for having me on the show today, Humberto. I mean, the two of us go back and we've had great conversations in the past. So I'm really excited to record one of those for others to listen in. And to come back to your question, so I have 4 horses. One of them is still a baby, an Andalusian yearling for those who know something about horses. And honestly, my answer might surprise you. It's horses. And I say that as someone who runs a deep AI tech company in one of the most complex regulatory environments in the world. And here's why. Horses are incredibly honest. They don't care about your pitch deck or your credentials. And if you show up distracted, tense, or trying to control too much, they let you know immediately. So there really is no faking it. And I think that's actually been one of the best trainings for entrepreneurship for me. You learn patience and, even more importantly, congruence. So, like, you need to show up the way you actually feel, and you learn to read signals really, really well. But I think the real parallel here is, and I've talked about this on LinkedIn quite a bit, and people seem to really connect to those posts with horses and with building companies. So the parallel between both, you have to earn trust every single day, again and again. That's literally what Denominator does. We build trust infrastructure. So maybe it's not a coincidence that a horse person ended up founding a digital trust assurance company.
Incredible. It's always cool to learn about someone who is working with horses and also the challenges of that. And it's really cool to hear about just how you have to show up every day. I mean, I just started now in business development, and just seeing it and knowing about your experience in entrepreneurship in business, it's something that I'm really curious and passionate about. But yes, welcome, Svenja. I'd love to hear more about your background. And could you tell us a bit more about what Denominator does?
My background is in climate finance and environmental commodities, and I've spent years working at the intersection of carbon markets and technology, verification systems, and industrial and compliance data. And what I kept seeing was the massive gap. Industrial companies like oil and gas producers, petrochemical plants, and mining operators care about carbon accounting. They have to, their regulations are becoming more stringent, but the tools available to them are completely inadequate for what's going on and for what's coming. So what Denominator does is we deploy autonomous AI agent that sit directly on top of industrial operational control and monitoring systems. And we convert that raw operational data into market-grade verifiable carbon intelligence continuously in real time. That's where the AI comes in. So think about it as a product passport for carbon intensity. Every barrel of crude, every cargo of LNG, every ton of copper, we can tell you the exact carbon intensity of that specific product, not just the facility average. So that's really a game changer. And we can prove it with a full audit trail that's digitally anchored, and machine verifiable. So the way I describe it to people that are not too deep in the industry, we are the infrastructure layer between the physical reality of the industrial operation and the regulatory and market systems that need to trust that data that comes from the project. So basically, we operate from sensor to certificate.
That's very, very interesting and really cool to hear about the inner workings of that. And when you talk about from sensor to certificate, I mean, coming from a carbon price reporting background, I think of policies, regulation, where carbon accounting is the most crucial and not the most important part. But when you mention from sensor to certificate, there's a big space between that from across the supply chain, across the value chain, depending on the project, on the commodity. What is Denominator? How do you obtain this data? How do you aggregate it? It sounds like it's project dependent. How do you obtain all this data, and how are you able to harmonize it into something that our auditor can understand?
Yeah, so I think there's an important distinction to make here. A lot of SaaS platforms in the space, they use AI only as a feature, maybe a chatbot on top of a dashboard or some analytics. For them, data was always available and they just made it pretty, to other stakeholders in the ecosystem. That's not what we do. So our value chain in terms of data is end to end. How do we do this? We use layered AI agents. And there's a reason this problem requires autonomous agents specifically. So first, coming to your question, how do we do this? Availability, right? Industrial data is extremely messy. It comes from dozens of different systems in different formats, different time intervals, different units. It's a big mess. And our ingestion agents solve for that. So they can normalize and harmonize data from very different sources into a unified schema. And as an interesting side note, for a typical location or assurance process, 40 to 60% of time is usually spent just on that step alone. Just think about the cost here and the bottleneck that we can address with that in assurance and compliance data processes. So second is the data integrity. Once the data is ingested, our anomaly detection agents run in real time. That's also really part of our secret sauce. If there's, for example, a methane spike at an LNG terminal, if a sensor drops offline, if a data point is outside expected ranges, our agents can flag that immediately, not in next year or in the next quarterly report, next annual report where you have to come back to the data right now. So that is also a huge advantage for producers. And then back to your questions such as regulatory compliance, CBAM, the regulatory complexity is really growing. There are dozens of certification frameworks and industry relevant ISO standards, and they're all evolving at the same time. The Carbon Border Adjustment Mechanism of the European Union has different requirements than methane regulations, which is different from ISO standards to do product level carbon accounting, which is different from 45Q credit applications here in the US, which is super relevant for the oil and gas sector, of course. And putting that together, you really come to the conclusion that a rule-based system breaks every time a regulation changes. And our agents adapt. It's adaptability and optionality for the producer that we can provide. We have regulatory watch agents that monitor changes and triggers recalculations when rules are updated. So the reports that come from us out of our systems have already been pre-checked on the latest regulatory calculation requirements. And by the time the verifier looks at an evidence package from Denominator, the heavy lift is already done. And that's why we are able to significantly reduce compliance costs and cut auditing preparation time, I would say, by a whole bunch. So lastly, to add here, the key insight really is that LLMs, large language models, are the perfect tool for regulatory compliance. And that's not just me saying that, that's feedback from some of the big fours, some of the largest energy producers in the world. it's the feedback across the industry, really.
Oh, and definitely, especially as a carbon price reporter, knowing the importance of monitoring, reporting, verification, that's something that has been historically challenging for different industries, for different sectors. You mentioned the carbon border adjustment mechanism that's gone into play this year. We're seeing ex importers in the EU having to fill out all this information across their supply chain. Some of it is verifiable data, some is hard to obtain, hence things like default of values. It's been very interesting. And I wanted to ask Svenja, what could you tell us about for example, like a specific case study where you've worked on that Denominator has contributed to carbon accounting, to helping auditors or other third parties understand and assess the carbon accounting of a specific project?
Yeah, absolutely. So, generally speaking, we think about this through four major verticals that we are working in. The first and most immediate is oil and gas. This is where we see a lot of demand, and it has been evolving a lot in compliance complexity. In terms of product market fit, we score 92 out of 100. So it's perfect. It's a perfect go-to-market strategy for us. There's petrochemicals with also very high complexity of regulatory compliance, reporting compliance. Also, coming back to your point, CBAM has kicked off in its operational phase around 6 weeks ago. So a lot of project developers and producers are fully unequipped when it comes to the data requirements for CBAM reporting and calculations. And the third and fourth big bucket that we work in are building materials, a lot of them also regulated under CBAM, and mining products, especially critical minerals that are relevant for the energy transition, copper, steel, aluminum. We see a lot of uptake on what is the carbon intensity of the mineral. If that's low carbon intensity, there might be possibility to charge a green premium for the commodity. And the last one is data centers. For example, even the EU regulation that just came out that requires data center operators to report their intensity of their operations. It's a major push for data insights. But in terms of use cases that we've implemented so far, we've operated in two different out of those four segments. We've successfully completed two projects, one in the Middle East in a carbon management and sequestration project, where we deployed a fully independent MRV system and brought the data all the way to the market in the form of MRV for carbon credits. The second use case is one of the first operating green ammonia projects in Latin America, where we are helping the project developer to access markets in the global north. So we are helping with CBAM carbon intensity calculations and also certification compliance for RFNBO, which is the EU regulation for renewable fuels from non-biological origins, which is a major certification scheme for producers to access European markets. And maybe as a last point here, across these segments alone, the TAM, the total addressable market of all of this is over $1 billion by 2030. And right now, there is zero infrastructure players that operate at scale in our specific niche in deploying autonomous product level carbon intensity accounting across all verticals. That's a huge market opportunity for us.
Definitely. And as you mentioned, the different sectors and industries you're engaged in, that you're looking into. I mean, it sounds like, whether it's oil and gas, carbon, or CBAM covered products, there is a need for your software. There's a need to not only account for carbon, but making that data understandable. And I'd be curious to zoom in and just learn more about what is the process from. Can you tell us a bit more about your software and the approach you use towards AI and what the workflow looks like?
Yeah, sure. It sounds pretty straightforward. At the core, it's a 5-stage pipeline, basically data pipeline. Stage one is connecting to the operational data of the producer. We do forward deployed engineering like other large Silicon Valley startups. Palantir is a good example in terms of forward deployed engineering business models, which means that our team deals directly with our clients to connect our agents to their operational data, the DCS and the process historians. And this is not API first or like plug and play SaaS. We really deal with industrial OT environments that are complex and every plant is different. So we provide that service to our client. Stage 2 is the ingestion and validation. The agents then normalize everything into a common data model, validate completeness, and start continuous monitoring. And this is really event-driven, not a calendar-driven process. When something changes, we process it immediately. And then further down, we work on the carbon calculation itself, depending on the methodology. We calculate product level carbon intensity per the appropriate use case. For example, the EU delegation regulation for CBAM. We can help with a full life cycle GHG assessment per batch and per cargo. And then, it goes into certification mapping. Our agents, they can automatically map those calculations to whichever framework the client needs. CBAM, MIQ, ISO, ICSS, whatever it is. And the key distinction here to other SaaS platforms or to traditional certification processes is that 85% of the logic can be reused across frameworks. So adding a new one, it's a configuration for us, not a whole rebuild, what you would have with traditional consultancies and, companies you hire for LCA processes. And then lastly, it's the output. We market market grade evidence for different registry schemas. Anchored certificates are also possible if the clients desire it. But the core feature here is really the digital audit trail for a full end-to-end evidence package for verifiers, submissions to registry and regulators, and the whole chain is immutable and machine verifiable. So it's pretty exciting what AI can do in the wild.
Absolutely. And, reading about Denominator and just the work that is happening, but also the information that is on the blockchain, I was curious, Svenja, can you tell us a bit more about what environmental attribute credits are?
So, that's definitely a question where I think we both connect to, right? We've met each other in carbon markets. So it's kind of environmental attribute certificates is our stomping ground. But for those kind of new to the market, if you think about carbon credits, at the end of the day, they're an environmental attribute certificate. And those certificates, they are a mechanism for basically transferring the environmental attribute of energy generation or another green claim separately from the physical commodity or energy itself. And the most familiar version or the most successful environmental attribute certificate out there is the Renewable Energy Certificate, or REX. People in carbon markets don't like to hear this, but you just have to look at the numbers. And you just have to think about it when, for example, a solar farm generates a megawatt hour of electricity. It creates two things, right? It creates the physical energy that goes into the grid and a certificate that represents the green attribute or guarantee of origin of that energy. And the reason this matters in a lot right now is traceability. So the grid is essentially a public good, if you think about it. And electrons from coal plants and solar farms, they mix together in the same wires, which changes the grid emission factor. So how do you prove that your facility, your data center, your industrial operation is actually running on clean energy? You need a system to track, match, and verify those attributes. Those are environmental attribute certificates. And an interesting, and also coming back to our POC in Latin America on green ammonia, one really important aspect here is called stacking, where you are able, if you can prove that you either produced green ammonia, or green hydrogen, or green ammonia from renewable electricity, from renewable energy, you can then issue a green hydrogen certificate, which can be retired, and then you can issue a green ammonia certificate. So you can see how an entire stack structure is evolving for environmental attribute certificates. Because if you think about it, what does green ammonia do? It creates the ability to export renewable energy. from countries where renewable energy production is cheap. So through the stacking mechanism of EACs, you really build a digital system for traceability and transparency for this guarantee of origin to the renewable energy itself through commodity value chains. That is a short take on EACs.
Yeah, no, and it's fascinating because, as you well said, we connected over carbon markets, and we've heard a lot about RECs and RINs and other similar mechanisms where we can see that where something came from and where that energy is coming from. I mean, when you mentioned the use of electrical grids, I think of AI. I believe there was reports that there's an expected 3,000 data centers that will be built across the U.S. You mentioned AI as something that's not only key for Denominator, but also in terms of tracking the carbon accounting, tracking the energy intensity of these infrastructures. And before we pivot to just broader climate tech, I was curious, is the US and the construction of more data centers, not only in the US, but in other parts of the world, is that something that where Denominator software will be heavily involved in or engaged with?
Absolutely. So we actually just got confirmation for a POC in data centers in Asia. And if you think about it, data centers are really critical asset class for hyperscalers, and they actually care about their carbon, emissions. And the idea that data centers are, green, it's how do you prove that? So
Mm-hmm.
what it comes back to is the grid is essentially public good, right? So how do you tap into the grid and how do you prove that your data center emissions are what you claim to be? So for that, it comes back that you need digital infrastructure to either really match the real-time grid emission factor with the emissions of the data center to then offset the RX. There are other ways to do it, but data centers, given that it's such a fast-growing industry with end consumers that care and a complex data, task at hand, it's a perfect use case for us.
Mhm. Definitely. And as we see these markets evolve and also the energy and the tracking and accounting of these infrastructure will be very interesting. We'll keep an eye out on environmental attribute credits. And yeah, zooming out and just looking at the wider picture that is climate tech and investments in this world, I'm just curious, right as of the current moment, maybe at the beginning of this year, could you tell us a bit about the state of the climate tech world and the investments that are taking place right now?
Yeah, absolutely. And I've been thinking about this for a while. Before we met, I was at PitchBook and I actually developed PitchBook's climate tech vertical when in like 2020, 2021, when everything was really rosy when it came to climate tech. And I think right now we are really at an inflection point. Now, climate tech is entering the mainstream here and there in a way that's very different from 5 years ago. And the conversation has shifted from should we invest in climate tech to how do we make these projects commercially viable at scale? It's a whole different discussion. And what I'm seeing is the arc of maturity and like maturing projects and technologies. And if you, especially on the deep tech side, technologies that were in pilot phase 2 or 3 years ago are now moving to full scale commercial projects. And the financing structures are evolving to support that. Well, they have to, but there's still a lot of friction. Why? Well, the biggest shift is that climate tech is becoming indistinct. Like you can't separate it from industry anymore. When we work with, for example, an oil and gas operator on carbon intensity certification, they don't think of us as a climate tech vendor. We are an infrastructure provider solving an operational problem, and that's healthy. So it means the technology is being pulled by market demand, not pushed by ideology. So I think that's really, really important. And on the investment side, you know, there's strong appetite in a few specific areas. First, anything connected to regulatory compliance driven by like, CBAM alone is creating massive demand. Second, methane monitoring and reduction. We see quite some uptake, and both because of regulations and because certified low methane gas commands at a premium, and also a lot of off-takers overseas have more appetite for lower carbon LNG and third, the intersection of AI and industrial processes. Investors understand that the industrial sector is about to go through the same kind of digital transformation that financial services went through 15 years ago. And in terms of emerging dynamics, energy sustainability is evolving into energy security and safety, especially here in the US. And that's creating pressure on utility providers and creating new use cases for carbon accounting infrastructure that really didn't exist 3 to 5 years ago. And what producers increasingly need is data that is data optionality due to regulatory uncertainty, and that's where we play. So yeah, that's my high level take on where we stand right now in climate tech.
Oh, fascinating. And just to hear about just the importance of whether it's vocabulary on, as you very well mentioned, energy security, energy independence, but also regulatory uncertainty. I mean, on the US, we read a lot about the changes made at the federal level, despite some states hanging on to certain. I mean, there is no national carbon market in the US, but there are subnational markets like the California one, Washington, and others. And it's fascinating to hear because you mentioned the importance of data. Despite all these regulatory uncertainties, CBAM is changing the way exporters and importers to the EU have to engage with that data. And now looking at maybe zooming in a bit more, but Svenja, I'm really curious, what are some of the financing barriers today in climate tech?
So many. I mean, this is something I think about constantly. And previously to founding Denominator, I was leading origination for a publicly traded project finance vehicle. So I've really seen a lot of the problems from behind the scenes. How do you finance these projects at reasonable terms? So both as a founder and someone who's been in environmental markets for a long time, the first barrier is the valley of death between pilot and commercial scale. That's where you see a lot, you know, technologies just biting the dust because they can't get through this, not valley of death from one VC round to another, but from VC to project finance. Why is this so difficult? Well, you see this arc in climate tech right now specifically. Technologies, as I mentioned, are maturing from demonstration to full-scale commercial deployments. And the problem is that the financing structures that they aren't really designed for that transition. Traditional project finance wants proven technologies with predicted cash flows, and climate tech is often asking investors to take technology risk and market risk and regulatory risk simultaneously, all at the same time. So the second barrier is data trust. Coming back to our use case, is actually why we built Denominator, because of this financing barrier. And that's directly what we solve for. For example, when a project developer goes to a bank or an investor and says, look, this LNG facility has a carbon intensity of X. The lender's next question is, prove it. How was that calculated? Who verified it? Can I trust this number 18 months from now when the regulation changes? And the inability to provide continuous machine verifiable carbon data is actually a financing barrier in itself. And it slows FID dramatically and also reduces commitment for long-term offtakes. And we are seeing this across multiple industries right now. Like, for example, appetite for trusted data comes from MENA massively, African countries, power producers, LATAM exporters who need to meet stringent import requirements, from European and Asian buyers and regulators. And something else that we see in projects is that the FID process can really stall because of carbon risk and because the financed emissions are unquantified. If you can certify the carbon intensity of your project upfront and continuously, you can de-risk the project for lenders and you can accelerate FID by month just because of the available data to match emission profiles of lenders as part of their, what they call risk-weighted asset profiles. And lastly, the third is really incentive complexity. Like look at 45Q here in the US. There are significant tax credits for carbon capture and storage, even moving forward under extremely changed regulations. But accessing those credits requires rigorous MRV. And we are in active discussions with developers in the industry who need that monitoring infrastructure to unlock the certainty of 45Q credits that then, of course, also unlocks the financing and reduces reporting risk to the IRS.
Fascinating. No, thank you, Svenja, for that look into the barriers today, and also just again, as two people who are very much involved in the carbon world, it is exciting to see. I mean, 4 years ago, there weren't markets like Turkey or Brazil that were legislating and finalizing these markets. So it is exciting to see other countries implement these, create these, and push them along. And Svenja, I want to thank you for your time. And as we near the end of the podcast, I'm really curious, as a female founder in this space, how has that shaped your experience? And also talking about just climate tech and industry and how all these climate tech and industry maybe don't sound that different. Do you see yourself as a climate tech company?
Well, thank you for that question towards the end. Honestly, I think the question of whether we are climate tech company is more interesting than the gender question, because the answer is we are an infrastructure company that happens to operate in the climate space here and there, not all the time. And our investors, and our advisors, we have advisors from Bloomberg, major AI companies, hyperscalers, capital market providers, and oil and gas sector. They are part of this journey because they see the infrastructure opportunity at hand, not because they're in the climate space per se. In terms of investment, we are heading into our first prize round, and we are working with strategic investors on the capital raise. Most of them are industrial investors, strategic investors, not really from the climate tech space, but also we work with AI investors, but mainly in industrial processes, industrial process optimization. On the second part of your question on being a female founder, well, I mean, let's be honest, only 2% of all VC goes to female-founded startups. 2%. That
Wow.
says a lot in itself, and I think it's worth another podcast. But no, climate tech actually has a better representation of women founders than most deep tech sectors. But generally, I think it's because the problem set itself attracts people who think in systems and who care about long-term outcomes and are driven by the greater good in many ways. And the industrial side that we operate in is still very, very, very male dominated. But I found that when you show up with working technology and real deployments that we have up our sleeves now, the conversations are about capacity, not so much credentials.
It's really, really, really exciting to hear, Svenja, especially as you said, we're looking into MRV, looking into growing something from a pilot to a commercially viable scale and model. It's been fascinating to have you on the podcast to learn about what Denominator does, its prospects, but also just as we see regulation around the world demanding more carbon accounting. I want to thank you for participating on our podcast. It was lovely to have you, and keep us updated as to how Denominator goes and in future investment rounds too.
Thank you. Thank you for having us.
We hope you've enjoyed today's insider conversation on Opus Talks. Join us next time for a deep dive into another industry insider's world. You can find more Opus Talks episodes at opusnet.com/podcasts or wherever you listen to your favorite podcasts.